Just like you, your business's health can benefit from regular checkups. Fortunately, financial health can be assessed entirely by you, no med school required. And one of the best diagnostic tools for your business can be a profit and loss statement, also known as a P&L statement. Today, we're going to run you through the what, why, and how a profit and loss statement, as well as some key learnings you can take away from this crucial financial document. Grab a seat and let's get into Profit and Loss 101. First up, the anatomy of a profit and loss statement. A profit and loss statement, also known as an income statement, is a summary of a business's revenues and expenses over a period of time. The basic formula at play here is profit equals revenues minus expenses. To go more detailed, your net profit equals your income minus cost of goods sold and operating expenses. So why is a profit and loss statement so important? When you're looking to assess how your business is doing financially, there are three main reports to help you: the balance sheet, the cash flow statement, and the profit and loss statement. Together, these documents show whether you're profitable or not and are essential if you're looking for a business loan or hoping to bring on investors. The profit and loss statement is the most critical of the three. It shows how much money your business earned and how much money was spent to earn it. It's an instant snapshot of your business's financial health and is super useful for helping you set goals and budgets for the future. Beyond being incredibly helpful for financial planning, a profit and loss statement is required by the IRS to assess taxes on your business's profits. The IRS needs a record of your business revenue and expenses to determine your total taxable income. Now, let's break down the key components of a profit and loss statement. But first, as a reminder, you should always be consistent with your accounting method. If you're using accrual basis reporting, you're reporting on revenue and expenses that haven't yet been received or paid. And if you're using cash basis reporting, you're reporting revenue and expenses only when they have actually been received or paid. Once you've aligned your books with the right accounting method, there are 5 key components that make up a standard profit and loss statement. Revenue or income, which is how much money your business earned from goods and services. Cost of goods sold, which is how much it costs your business to make the products or deliver the services you sold. This could be inventory purchases or manufacturing costs, for example. Gross profit, which is your revenue or income minus the cost of goods sold. Operating expenses, which are expenses for your business that aren't directly part of your costs of a product or service. These can include payroll, rent, interest, insurance, internet, and more. Finally, there's net profit or net loss. This is your gross profit minus operating expenses, aka your bottom line, which finally answers the key questions. Is your business making or losing money? And can you really afford that new coffee machine for your office this year? For a profit and loss statement of a specific time frame, there are some key learnings to take away, like how much your business earned from sales, how much your business spent on expenses, how profitable your business is, and where you can reduce expenses to become more efficient. Building profit and loss reports monthly and reviewing them over time helps you understand long-term trends, like whether your business is becoming more profitable over time, how your sales might be changing over time, how your expenses are changing over time, and whether you're becoming more efficient with your business expenses versus your business income. For example, in the reports section of your Wave dashboard, when you compare periods on your profit and loss statements, you'll see an arrow indicating whether each line item increased or decreased between the 2 periods, so you can easily see what changed at a glance. All of these learnings, individually and collectively, can be hugely helpful when making smart money decisions as a business owner. Let's put all this into practice with a fully built out profit and loss statement. This one was built using the reports found in the Wave dashboard, which gives you immediate insight using all the financial data synced with Wave. To start, you can see a simplified snapshot that gives you a high-level view of your income, minus cost of goods sold and operating expenses, in order to show your net profit. But let's dive into a more detailed view. At the top of the report, we start with income, which is the same thing as revenue. This outlines how much money you're making. Then, there's the cost of goods sold, which is how much it costs to make the products you're selling. In this case, it's mainly materials and subcontracted services. Now, we take the revenue, aka the income amount, and subtract the cost of goods sold to get the gross profit number. Below that is a rundown of all the operating expenses you're incurring. This includes things like computer software, insurance, meals and entertainment, and office supplies. Finally, we take the gross profit and subtract the operating expenses to get the bottom line. Good news. In this case, you're left with a net profit. So now, you can start researching fancy coffee machines. Alright, by this point we've covered the what and why of profit and loss statements. Now, we're going to show you how to create one in just 6 easy steps. First, you want to gather any relevant financial paperwork, statements, or documents. This includes invoices, receipts, bank transactions, credit transactions, and any other items that show money earned from your business income or money spent on business expenses. Hot tip: when you use Wave to manage your money, your income, expenses, payments, and invoices are organized for you, so your profit and loss will be ready to go. Next, list out and add up your total income from goods or services. If you sell multiple goods or services, you can organize your sales by subcategory. Then, list out and add your total cost of goods sold. Remember, these are costs that are directly related to the goods you make or the services you provide. Next, subtract the cost of goods sold from your total income, and you'll be left with gross profit. Then collect and add up your operating expenses. We'd recommend creating categories for each type of expense. And remember, these are costs that are not directly related to the goods you make or services you provide. Think internet, rent, payroll, branded propeller hats to hand out at the mall. You get the idea. Finally, you're going to subtract operating expenses from your gross profit to end up with your net profit or loss, which is your bottom line. Congratulations! You just passed our crash course on profit and loss statements. You can now perform regular health checkups on your business by building profit and loss statements on a regular basis or using an accounting software to do it for you, analyzing the findings, and making decisions to improve your business's financial health. And remember, the reports section of your Wave dashboard easily generates reports like profit and loss statements. We can already smell the coffee beans. For more money management tips and tricks for your business, like and subscribe.